folks, Dan Frio here with your opening bell for June 26th, 2025. So mortgage rates, they continue their descent, and I think it's going to continue today because we got some jobless claims numbers, and they actually came in line. We got a lot of financial news coming in today, so if you're out there and you're looking to buy or refinance, mortgage rates are starting to come in line to where you need them to be. So I'm expecting these things to go down probably within the next couple months, about 6.5. But if you've been waiting on the sidelines to kind of pull the trigger on refinancing or buying a home, you can never rely on what's going to happen the next day because one tweet or one just drone strike somewhere could really change the markets. So what we're going to talk about in today's report is the economic news that came in today. We got jobless claims. We have a whole bunch of other numbers coming in. So without further ado, let's get to the headlines that we're seeing right now. Jobless claims fall to a 6-week low. No signs of surging layoffs. I'm sorry, I got inflation on the brain. Based on the news that we got on the jobless claims so far, the stock market's liking it. We got the indices all the way across the board up. We have oil over $65. Well, it's 65 and 55. So that's okay. We don't want oil to go over $65 a barrel because this helps on the inflation front considerably. And then we have the 10-year Treasury yield also dropping as well with mortgage rates. Let's go over to the crypto markets and see where they're doing for the day. It's down 700 to 107. So there's really nothing going on there because these are really volatile. Yesterday, I think Bitcoin was up $3,000. So what are you here for? Well, folks, you're here for right here. So we got breaking news this morning on the economy. We got GDP, the revised numbers just came in. We got jobless claims and a whole bunch of other things. So I thought I'd twist the turn a little bit today and bring you over to Bloomberg TV to give their forecast, or not their forecast, their news for today on jobless claims. First quarter GDP was revised, and a lot of other economic news that we'll be focusing in on because we were focusing in on what's going on with these things over through here. So let's get over to that first. And then after this report, I'm going to show you the economic calendar, what came in today, what was in kind of on point, what was a little bit of a shocker, and what will be market movers today. So let's get over to Bloomberg and see what he has for us in regards to jobless claims, first quarter GDP revision, and more. Take it away.
Durable goods orders on a headline basis hasn't crossed yet, but ex-transportation up 0.5%. The capital goods orders, non-defense, ex-air, what we call core durables, up 1.7% after falling 1.5% last month. So this is good news. Businesses still spending. We will have to see what the breakdown is there. Here's jobless claims. They fall to 236,000 from 246,000 last week. There were a lot of people who thought this may be a seasonal adjustment problem that pushed claims up in recent weeks because school was ending, and maybe that's partly the case here because we do see a fall of 10,000. Certainly doesn't suggest that the economy is falling back. The advanced goods trade balance comes in much bigger than expected, $96.6 billion. The forecast was for $86 billion. Imports were flat on the month after falling 20% last month. So that's an interesting number. We maybe got some rebounds in orders after the president put a lot of the tariffs on pause. And finally, GDP, this is the third reading. It comes in at negative 0.5%, which is significantly worse than what we had seen in the second reading, which was a 0.2 decline. Personal consumption was only 0.5%. It had been initially reported as 1.2%. So it's going to be interesting to take that apart and see what exactly is going on with the GDP numbers, although even they are about 2.5 months old now.
Mike, can I just ask you just to compare and contrast what's happening with initial jobless claims and what's happening with continuing claims? The two stories, the two pictures maybe you could paint looking at those two data points at the moment.
Well, continuing claims have been interesting because they have moved up and down, and the trend should be, we thought, that maybe people were having a harder time getting a job, and that comes out in today's numbers. We go from 1,937,000 to 1,974,000 in continuing claims. Continuing claims would give you the idea that companies are not hiring at this point, which is pretty much the narrative that we've gotten. Jobless claims, though, the initial jobless claims are suggesting that companies aren't firing people either. So everybody's still sitting on their hands, waiting for tariffs, waiting to see what the Fed's going to do, waiting overall for some indication on the economy.
Fantastic. So that's what we have in regards to the news that just came out today. So let's break it down so you can visually see the numbers. So here's what he just went over. He said continued jobless claims. This is showing people are having a little bit of a hard time getting jobs, and there's about 3 or 4 people that I met over the weekend, and they said the same thing. They got laid off, or they were doing the transition or something like that, and they're having a little bit of a tough time getting jobs. And then I spoke with a couple of people last night. We went out for trivia night, and a young lady we were with, she actually has 2 or 3 job offers. So there's a lot of dynamics in there. So make sure your qualifications are there when you're looking for that job. So durable goods orders, they came in at 0.5. This is the number he said. The core PCE. Now, this isn't the PCE that we're really going to focus in on because that's coming in tomorrow. This is the inflation number through here. So we'll skip through that. I don't want to get you confused there. But durable goods orders up 16%. I just think this was front loading of a lot of people just buying stuff, companies buying stuff in front of those tariffs. So I'm not going to look much into that. But here's the GDP numbers that he just came in with. He said it was revised from a negative 0.2 to a negative 0.5. That was kind of a shock of a revision there. GDP price index up 3.8%, so he went over that as well. And then the trade balance. So initial jobless claims came in at 236, not quite as much as they were expected, and quite lower than where they were previously. So the markets are reacting to this pretty good. If we go over the stock market, like I said, let's get to the main indices. We have S&P just this close to a record high, and that's right through here, the S&P 500. So this is what we're seeing in equities. The bond market is continuing to rally. So here's what we're looking in the bond market. The 10-year Treasury is down 0.02. Remember I said pay attention to this if you can't get access to the MBS. But if you have access to the MBS, like watching me every day, focus in on this thing, because this bond, the MBS, means mortgage-backed security. So it's a mortgage bond that trades on Wall Street. The yield on this bond is the yield on your mortgage rate. But what happens with this, they add in what's called LLPAs, and I'll do a video on that so you guys understand that. And then the bank's profit margins, that equals your mortgage rate. So as this number goes up, this is the price of the bond. As this number goes up, rates are coming down. So let's look at a 2-day chart. This is kind of a nice chart right through here. Look at the 5-day chart right through here. This is up, up, up and away. And remember, folks, as this goes up, rates are coming down. So if you've locked in your rate down through here and rates have reprieved, or you want to check and see where you're at now, if you have at least maybe 3 or 4 weeks from your closing, love for you to reach out to me and see if I can get you a better rate, because we have a slogan here: one application, one credit pull. We're going to shop your loan over 30 different lenders. I'll get to that in a second, but we need to continue with the story that we have. Here's what the Federal Reserve is going to monitor, and these numbers are starting to come in as we speak. The GDP came in, they already revised that, was negative 0.2, came in now at a negative 0.5. This is already history back in the books. So now we're looking at Q2 GDP. This was the final revision, or final number. They revised this like 3 times, so they came out with a negative 0.5. That's dismal. But the next time is, there's 2 quotes coming in on GDP. One from the Federal Atlanta Fed. They're saying it's going to be around 1.5. Other analysts are saying the GDP at the end of the year might be around 3%. So we'll see how that goes. Unemployment rate, it's sticking steady at 4.2. The PCE, this is the number that the Federal Reserve puts the most emphasis on when it comes to inflation. It's actually coming out tomorrow. So if we look at the news we're getting tomorrow, right through here, the PCE. Now, the numbers that we're making moves today, we were looking at, is basically we were looking at the jobs market, continued claims, that's up, but it's not really falling off a cliff when it comes to initial claims. So that's saying the job market's okay right now. The Federal Reserve, if this number came in really bad, the Federal Reserve would cut for sure, but this number is probably going to put them on the brink of really not deciding what they're going to do, maybe until the next meeting. But the numbers that we're going to get tomorrow on the PCE, if you see this go below 2, that should also signal the Federal Reserve probably should do something in regards to rates, because the PCE, this is the number one inflation figure that the Federal Reserve monitors. They want this at 2. It was about 7% about 2 years ago. Now, if it gets to 2 or below, they should cut, because tariffs, maybe that's a thing that won't actually transpire. It will transpire, but is it going to be as inflationary as people might just anticipate? And so far, it hasn't. But we don't know actually how this is going to all transpire until it actually takes place. So that's what we're seeing right through there. The CME FedWatch tool, let's see if there's any changes on that to see if the Federal Reserve has changed any dynamics on when they're going to cut rates. So basically what this is the CME FedWatch tool. This is created by the Chicago Mercantile Exchange. What they do is they set this up to just check the probabilities of what the Federal Reserve is going to do at the next meeting, and meetings all the way through the end of, I think, 2028. I'm just concerned with 2025. So let's get over to it. In 34 days, the Fed's going to meet. What are they going to do? Well, the probabilities are this. At the next meeting, they're not going to do anything because the federal funds rate right now is at 4.25 to 4.5. Don't believe me? There's a rate through there, 4.25 to 4.5. And then they're saying at the next meeting, though, there's a 9% chance it stays there. So there's most likely a chance that it's going to be cut in, what is this, the September meeting. So we'll monitor this as it goes. But you guys know, even if the Federal Reserve cut rates, doesn't mean mortgage rates are going to come down. You really have to pay attention to the bond market. Let's get back to the bond market. So you focus on these up 15 ticks. It means mortgage rates are going to continue to drop. But again, if you don't have access to this, just monitor the 10-year Treasury. And as this goes down, mortgage rates are coming down as well. So that's our report for today. Now, let me tell you a little bit about myself so you understand who I am and what I do. I'm actually a federally licensed mortgage loan officer. I've been doing it for over 35 years. I would love to help you if you're trying to navigate buying in this market, or maybe you're looking to refinance. When you're trying to buy your first house, it's really daunting, I'll put it that way, and it can be challenging. So why don't you put somebody in your corner that's been doing this for over 35 years, has access to over 30 different lenders. Now, let me get to that point. So I work at a federal bank. That's unique in itself because I'm licensed in all 50 states as well as Puerto Rico. But the really wild thing about the bank here is we're set up with 33 other banks right now. Not banks, but lenders, credit unions, mortgage companies. And why we did that is to help you guys, because we kept getting applications, and people were like, well, this place is giving me this rate and so forth. So we decided, okay, well, why don't we give people a clearinghouse, basically, of we can offer you, or when we're working on your loan, we're going to check up to 33 different lenders to see who's got the best rate, who's got the lowest fees. But first of all, you got to make sure you're in the right program. So check out yesterday's live event. We go over the programs that they're offered out there, the pros and cons of each one, and you might be able to figure out or pinpoint which one's best for you. So check out the live video from yesterday. You'll be a little bit hopefully impressed with that one because we go through a lot of details. But if you're just out there looking to buy or refinance, I would love to help you, or at least give you a quote and put you on the right direction of, how much you can save if you're refinancing, and also putting you on the right path to home ownership, working with your realtors, the attorneys, and everything to make sure it's a seamless transaction. So my name is Dan Frio. Like I said, I do these videos twice a day. Here's my website, therateupdate.com. Here's where you can go and find out all the information about me and my team. If you want to put in your application, you can do that right over through here. But what we really want you to do is give us a call, or at least schedule an appointment with us. So you can schedule a call right through here. You can ask me a question up in here, or you can schedule a consultation with us right here. We'd love talking to you because we want to get your story before we start really working on this. So check that out. If you're looking to buy that home, check and see if you qualify for this program right here. It's $7,000, up to $7,000 in down payment assistance. There's no payback. There's no lien on your home. Basically, it's almost like free money. So check that out, as well as a lot of other videos that we have here and on YouTube. So thanks for watching, folks. God bless. Have a fantastic afternoon. I'll be here at the closing bell to let you know how all this mess ends for the day. But so far, rates are looking pretty darn good, folks. See you later. Bye-bye.